And I'm live?
Yeah, I guess. Okay, we're live. It says live right now. I'm
Now it says
so
live. Why
sorry.
did it
Oh my
say that?
god.
It says you're in the show. Everyone can see and hear you. Maybe it was just your show, like just you and I could.
I have no clue. Oh my god. This was I'm so sorry. I don't really know what's going
You're
on
doing
today.
great.
Oh god.
For those of you listening, it took us like a full 10 to 15 minutes to figure this out, but we did it.
Yeah, exactly. Oh my god, that's all that matters. I just want to say I'm such a fan of yours. So I already listened to like a bunch of your podcasts, and I know that like one thing I wanted to learn about like is you were before entering venture, you were actress because you saw like that's what I guess like women do in the tech community or in the ecosystem that you grew up in. I wonder like since like your dad would bring you guys to like a bunch of conferences, what were the things that you've learned early on that kind of like shape you into who you are? And I was so in shock that like at that point like women in VC was still like not a thing. But I wonder, like, what was your experience like growing up with uh a like many generation venture capitalist family, and what were like things that you've learned, and how did that kind of like contribute to your career later on today?
Yeah, I took it was very ironic because I came from a very venture-oriented family. I grew up in Silicon Valley. I'm a fourth generation venture capitalist and the first female. I used to kind of shy away from sharing that because there's a lot of preconceived notions when you say you're the fourth generation of anything. But as a female, I didn't really think I could go into this industry, even though it's all I knew, because I just didn't see women around me. So I actually idolized my aunt, who was an actress, and she was a successful actress in the sort of 90s. Her name's Polly Draper. And I was like, oh, that's what women do. And so I went into entertainment. I actually went to UCLA, School of Theater, Film, and Television. And I had some success, was on a Nickelodeon show, did a bunch of movies. And then I had this moment where it was like 2009, and I went to the first ever Twitter conference. And, again, I'd grown up in Silicon Valley around amazing entrepreneurs. And this was before anyone really was excited about them besides the community of Silicon Valley. This is like before the TV show. It was and still is kind of a sleepy town, but a lovely town that I grew up in. And I was like, okay, I'm familiar with this. Something cool's going on here in social media. And I had just had this audition, and it was for like one of the Transporter movies with Jason Statham. And I had waited all day, like 5 hours or something. And I was ready to go like read my sides. There were 500 women in this audition room. And they sort of said, okay, come in. No, turn around, click, turn around, click. No, don't speak. Okay, thank you. Goodbye. And I felt so disgusting. Like, I just felt like, wow, and I realized I'd been sent on this audition from my agent through an organization called Charlie's Bodies. So they were literally just looking for like bodies. And it made me just feel icky. And then because I was this Z-list celebrity on a Nickelodeon show, I was invited to the first Twitter conference, and Tony Robbins was there. There were all these incredible sort of early Twitterers or tweeters or whatever. And it was mostly male. I can name the 5 women that were in the room. I'm still friends with them today. But I was like, something is really cool. Like, something cool is going on here. And at that time, I'd have 6 months on filming this Nickelodeon show and 6 months off. So I decided to move home. I started a tech talk show out of my parents' garage. It was one of the first, if not the first, tech talk show. And I know that because now there's millions, but I had like Elon Musk and MC Hammer and all these cool people, and nobody cared. So I ultimately took that show to TV, built out a whole tech news blog around it. I really became an entrepreneur, and we were nominated for an Emmy. It was kind of like a Borat style, fun tech talk show. I got these guests to do silly things. I was one of the first people to interview Drew Houston from Dropbox, and really like gave a lot of these people a start as the show got bigger. After 2 seasons of that show, it wasn't like this show that I'm on with you. I was only interviewing men, and I was only interviewing men in tech. And that was a problem for me personally. I was a female, and I was like, I didn't think I could go into venture and tech because I didn't see any women around me, even though it's all I knew. And so I made this initiative to interview 50% women in tech. I got Sheryl Sandberg before she'd written her Lean In book. I got, Jessica Alba when she started Honest Company, and these women were just flocking to me. I still today call this the Batwoman signal. My team calls it the Batwoman signal because there is no lack of women starting companies. And because I started in media, we are just flocked to. Women want to work with women. It helps us win deals. Ultimately, I started seeing this opportunity, and I started writing small angel checks, negotiating sweat equity, figuring out how I could support these female founders early on. One of those deals I ended up investing in. I made a 26x return in less than 18 months by selling secondary when Benchmark came in and marked it up. And I was one of the smaller investors. And everyone else ended up losing their money except for me because I sold. So that was my little track record that I built. And then I went and raised my first fund. We're now in the middle of raising our third fund. We have over 72 businesses led by women. We have 5 unicorns in there, and I'm really proud of it. And it's not a man-hating club by any means. I always like to say we have 4 male CEOs and over 72 businesses. So, but we saw 10,000 deals last year. Like every year it goes up. And I can't believe we even hit that number. But there's such a misnomer that women are not starting tech companies. Like people still say that to me. They're like, is that really a big enough market? I'm like, you just don't know where to plug in. Like you plug into us. Like we need more capital. And I can't wait till we're managing $1 billion because we can definitely put it to work and make a ton of money.
I wonder when it comes to so I know that you have a very successful media career, and I wonder how does the fundraising journey look like at the beginning? I know that you mentioned you would pitch to the women philanthropists and then they will introduce you to their husbands. And I wonder how easy it is to convert the guest to become an LP, and what would be the challenges that you would face in that degree or
Yeah, no, that's really interesting. A couple of years ago, I wrote this article called Investing in Women Isn't an Effing Charity. And I used the real F word. So I'm sorry, I'm not going to use it on LinkedIn. But it really hit a nerve with people. And I'm still quoted regularly because people look at us as though we're charity. And I'm like, no, we're building billion-dollar businesses. Just because we're focused on investing in women doesn't mean that it's a charity. And, unfortunately, in society in the past, men have passed these pocketbooks down from generation to generation and not passed them to the women. And so we were taught as women to give away our money before we were taught to grow it or invest it. And so in the beginning, I was meeting with quite a few philanthropists, as many female billionaires as I could find on any of those lists. And, I didn't meet with all of them, but I did track quite a few of them down. And I found that while there's always tax things that benefit a lot of these investors in general, there's this thing about philanthropist women, especially in the older demographics, unfortunately, where they're like, I'm scared to make this investment. And I'll say, well, why? They'll say, well, I don't understand it. I don't understand it and I don't want to lose the money. And I'm like, with all due respect, you just told me about a $3 million check you wrote to this charity. So what's the difference here? Because I'm not planning on losing it. First of all, that's not the game I'm in. That's not good. So my plan is to make you more money. And you're going to make more of an impact by investing in these for-profit opportunities. Women are only getting 2% of venture capital funding still. So there's this huge discrepancy. I mean, I just heard the numbers that was I'm going to butcher them, but it was 4 billion went to women last year and 170 something billion went to men-led companies. And we need everybody. We need men and women, but we need to make sure women are in leadership. I look at it like today, we're in this really interesting place where everyone in the world is so scared. Everyone's living in fear right now. Everyone's operating out of fear. I think it was something that came out of COVID, and everyone just became addicted to their phones. And now they're seeing every piece of negative news. And I have to say, working in startups and investing in women, I see so much hope because I'm every day seeing entrepreneurs from around the world. You have this amazing, beautiful bird's eye perspective. I'm seeing these entrepreneurs of all, shapes and sizes, different races, different nationalities, different ages, and different genders start companies that are solving all of the problems in the world today. And I do believe that today, if we had more women in leadership, we wouldn't be talking about going to war. We wouldn't be talking about all these things that are freaking people out. I think there's so much good you can do by investing in women. And it's not just granular by like writing a check to like this, startup or what have you. You can pull a woman into the boardroom, talk to your sisters, your moms, your wives about money, get them excited about the deals you're doing. But yes, to answer your question, I did see a lot of female philanthropists, and I actually stopped pitching them because I now can meet with someone and sort of say, I can qualify them and be like, this is going to take me 10 meetings. And if I go meet with a woman who, was a former entrepreneur and someone took a risk on her, she understands this a little bit better, and it saves me time, honestly. And it's a bummer because a lot of these female philanthropists have a lot of money to put to work. And I just wish they were thinking more for profit as well. And I love nonprofits. They fill a hole in society, but we are focused on something totally different.
I wonder when it comes to like building up, building up your track record, at what point do you decided to go off and raise your own fund versus angel investing? I know that you mentioned like the 26x secondary sale of, I think it's Lauren and Wolf.
Laurel and Wolf, yeah.
Yeah. So I wonder, how do you was it like the only exit you had at the point, or like did you invest in like 100 company already? And I know that you would pass along deals to like other investors, like the Sequoia of the world. So, like, how did you kind of build up your network to a degree that you could kind of like pass along these deals to the downstream investors?
So yeah, in the beginning, you've done good research, and I really appreciate it. Having been a former talk show host, I really appreciate it when people do their research. So thank you for that. I started when I was starting, I was sourcing deals for not only my dad, but the other greater venture community. And I found Paperless Post, some of their first investors. My dad will be the first to tell you I found Facebook, and he gave it to Teresa Gao, and she was at Excel at the time. And then the valuation went too high and he didn't do the deal. And he's still so mad about that. I've sourced quite a few deals. So I was just sourcing them. I mean, I didn't have the resources at the time. Then I was on a Nickelodeon show. I was making some money and could start angel investing a little bit. And I think I did about 15 deals, and I was writing really small checks. And then when I had that return, and it kind of returned all the capital I had put to work, which is pretty early, typically it takes 7 to 10 years to see anything back. I felt like, okay, this is something I can go out with and raise. And I don't think there's any point in your career. I mean, I'm queen of like fake it till you make it. Like I was just going out meeting with people. I didn't know what an investor looked like or who had enough capital to write a check. And I was just I always found there would be these meetings I'd have where I thought they were pitching me a deal. And then they'd be like, oh no, I have a family office and I can write you a check. I'm really interested in what you're doing. And you just like never know where it's going to come from. It's such a strange business. And it's really, it's a numbers business. So, every fund I raise, I probably meet with like 500 people. And so you just want to get out there and meet with as many people as you can. I think the thing that helped me the most was networking, which I had to do for my show, which is like what you're doing. And, I really got to know these people through my show, because you spend an hour with them, you have them back, and so quite a few of the guests on my show ended up investing. And that's where I started my kind of, LP base. And then after that, after fund one, you raise fund two, and you start getting into bigger, more institutional investors. But really, if you're doing what you said you're going to do, this is like the transference of money is like a trust thing. And so it's a very people business. You can't really do it all through Zoom. COVID reminded me of that. Like, you really need to meet with these people. You need to see them in person, both ways. Like, I want to make sure I know the founders I'm investing in, and I want to make sure that I know my investors as well. It's really building this community and this like long-term relationship where you're getting to know these people very well. And it's not always easy, like when I look at some of my founders, you certainly have to lose some money to make money in the game we're in. This is early stage investing. It's the riskiest asset class. And all we do is try and figure out how to de-risk it. But that 30% of your businesses will likely go under, and one could return the whole thing. We hope it's more than one, but that's, kind of what we're talking about. And so I've seen things go every which way at this point, having made over 100 investments in 72 deals. And you see sometimes your founders are your friends, and sometimes you're like, hey, I got to turn the mirror around and show you what's going wrong. And you're not going to like to hear it. And I disagree with how you're operating this, and those are such tough conversations to have, but you really get to know people. And I think the biggest learnings for me have been the times that the founders didn't face the music and like weren't transparent. And so I look for transparency and, certainly honesty and in those first initial conversations. And if I feel that they're hiding absolutely anything, I just walk away. I'm like, I'm not even interested. You want to work with good people who you feel will reciprocate your values.
Totally. I also want to say, like, I feel like you're such a like relatable person, because I feel like coming from like your background, I would assume like, let's say your dad or your brothers will be like talking about deals with you at all time. And I wonder, like, would there be a lot of lessons that like you've learned about like the, sourcing or picking when you talk about like, let's say the Facebook deal? Like, I feel like being a media person, like it gives you an edge to kind of like see things earlier than a lot of people. I wonder, how would you kind of like, would you have like a deal funnel for like, let's say, oh, here's like 75 deals in my radar, and then like this is how I kind of like diligence them, or what is like the picking, winning, or like eventually exiting look like for you after, let's say, sourcing like or like meeting a lot of people?
Yeah, I mean, I was mentioning before that the network is really where it begins. So me doing this talk show previously really introduced me and plugged me in and made me very accessible to people. I think being accessible and relatable is really important. I don't think you should ever be like sitting on top of a pile of gold. There are institutions that act that way, and I think that's wrong. Like, I'm investing in diversity and inclusion. Not everybody knows an investor. You can find me online. You can find me, fill out a form on our website. You can, message me on LinkedIn. I've taken pictures on Instagram. And so I think you need to be very accessible. I mean, a huge piece of being a great VC is that funnel. And I've gotten to a point, I feel very fortunate that like there's days where I'm like, okay, I'm not going to look at deals for 2 weeks. And I have this fear that it's going to turn off, like that it's like somehow the funnel's going to turn off. And it never does, because people always need money and they're always pitching you, and you can just sort of hold off and say, for 2 weeks I'm fundraising, and then for 2 weeks I'm looking at deals. But I want to be in that business. I love being in the business of like betting on people's dreams. I think that's, where the funnel began for me personally, was just reaching out. And as a networker, you cannot be afraid to reach out. I mean, when I got Mark Cuban on my show, I just Googled his email address and I emailed him for 2 years, and he would write back and he'd be like, no, can't can't. And then like 2 years later, he's like, I can do it tomorrow in San Francisco. I wasn't in San Francisco, but like you bet your ass. Sorry, that was a bad word on LinkedIn. I was on a flight. I was on the next flight. But I figured it out and got, Mark Cuban on the show. And I think that's a really important lesson for people who are people are really afraid to reach out. And I think it's really important to just like, you got to get past that. Like you have to just reach out, ask for what you need. The most helpful thing for me when people reach out to me is like, I'm fundraising for my deal. Like you have to be super specific. The hardest thing I want to help as many people as possible. Also, a lot of people send me resumes to place them, in jobs at my companies or, ask for advice. The hardest thing for me is when someone writes me an email being like, can I get on the phone with you for 15 minutes and just ask your advice? I'm like, I don't know how to help you. I don't have a ton of time. I actually don't have a ton of those 15-minute blocks. So could you lay it out over email and tell me specifically what you want? And I'll try and help you if I can. And then, if it makes sense, we'll get on the phone. But I think just be very specific about your asks. I think if you're a smart person and you're writing a nice email to someone asking for advice, like they'll often respond if you're thoughtful and did your research on them and how they can help you. When it's vague and just sort of a blanket, I want to get to know you, it's not helpful. I'm in the business of making connections and doing deals. So that's what I want to kind of like keep moving forward all the time. And then in terms of our diligence, we start with the pipeline. And now we track it all in Affinity, this great CRM product, and we try and get through as many as we can. I obviously can't sit down with 10,000 deals a year, so we kind of filter by category. Right now, we're very focused on future of family. How do you support the family at work, at home, the physical health of the family, and the financial health of the family? So we kind of put different filters on. And then I also did this podcast called Monumental to interview different leaders in childcare to really like hear firsthand what people needed, different politicians and people kind of working on childcare so that I could sort of center that funnel a little more and get specific deal flow in that category because I thought that was something we needed a little more of. And so, we're always iterating and there's no perfect system. You want the deal flow and then you want to find the deals and sometimes you have to go after them too. And in terms of winning the deals, that's never been an issue for us. Women want to work with women. There's too few women putting capital to work. And so, it's, I think that's been the easiest part in the early stage for us.
Totally. I have so many questions. I want to start with like one of the things that like you talk about winning, but like I guess in terms of liquidate. So when you were talking about the deal that you liquidated and you made like 26x. So I wonder what were the signal that you feel like at that point that you decided to liquid your company. So is there any kind of like thought process around it? And like how do you think about liquidating in your overall portfolio construction or like basically managing your own fund?
I think for me, it was a really great opportunity to find liquidity early. And it, you don't hear 26x multiple that often. Like if you ask most VCs, it's, probably an 8x is like pretty great. And so on average, of course, there's ones that are much larger and I have much more high aspirations like for our funds. But I think that for me was like, 26x multiple, I'll take it. Who knows what's going to happen here? Also, I think for me, when you're an early stage investor and you're not on the board, and at that time I was angel investing, I wrote a very small check. There were a lot of reasons I sold, but I wrote a very small check and I had no rights. So when you have no rights, like this is a little Wild West. You have to really protect yourself however you can. So if you don't have a board vote or enough ownership in a company, you should consider selling secondary, at least part of it. And then maybe you get both sides. A lot of people will sell like half or a third or something like that, and then get the upside too, just in case. But often as a smaller early stage investor, if you don't protect yourself carefully, you get completely wiped out. And I think that's what a lot of people don't understand. And so that would be a reason. Like if I sit on the board and own a very large chunk of the company, that's a totally different situation, and I would hold all the way. But once you become one of the smallest investors, like Benchmark came in, I'd written a really small check. It was a great opportunity to sell.
Mm. When it comes to like picking if you go for like 506B or C as a media person, I guess like would you I don't really know if you're going like 506C, like so you can raise publicly, or do you do 506B? Like what's the thought process on which route to choose in general? But also like I guess like also depends on which fund you're in, since like you are in like fund 3, I believe. Like you just mentioned fund 3. So
yeah, we're in Fund 3. So
okay,
I can legally publicly talk about the fact that I am fundraising, which I couldn't do previously because I'm a 506C. So we're testing that out for the first time. It hasn't made an enormous difference to us, other than there are some real pain in the butt questionnaires that your investors have to fill out. I mean, this is like really nitty gritty. If people want to hear about it, they can call me. But that's been the only hang up. That said, I've started to actually value doing the 506C recently, while my lawyers would say they feel the complete opposite. They're like, this is such a nightmare that you're making me do this. But I've started to value it, especially post-COVID. Unfortunately, fraud is up, crime is up. And I'm talking specifically about like wire fraud and money fraud. And I have personally experienced multiple con artists trying to pretend to invest in my fund, which is so bizarre because I'm like, if there's no money and you're like a con artist, what's happening here? And what are you trying to get from me? And
exactly what?
there is
Sorry,
so
what?
many people who are so actually having them have to fill out these extra questionnaires has been a real guard for my fund recently. I mean, the stories I could tell you are insane. I can't believe it. I mean, I don't know if it's because it's our third fund and we're getting into larger pools of capital or what, but I have personally experienced this like too many times. Like and it's such a waste of my time. It's such a waste of everybody's time. It's like, and I don't know what it is. They want to kind of latch on to you and pretend they're something they're not. And then I don't know. I don't I'm afraid that some of them are watching or something. So I'm
Oh
like,
no.
I won't go
Sorry.
into detail, but people are welcome to reach out and tell me their crazy stories, and I will tell you mine. But it's been like a real time waster for us. So actually the 506C, regardless of the media thing, I just felt like I have a big media personality. And so that protected us in an interesting way and I was curious if it like helped for me to be able to say on stage or to your show that we're fundraising. And it's been about the same because you want good people coming into your fund who you're going to go out and meet anyway. But it has kind of like protected us from fraud. So that's been nice.
Wow. I'm sorry. What is happening in the world? Oh God. I'm so sorry to hear that, but that's like also hilarious to hear too. Like why?
Yeah.
Why would they pretend to be investing in something? Like
Oh, I can't
isn't
even.
fraud supposed to be the other way around, to be like, hey, we have a company, can you invest in us?
No,
Shouldn't that be fraud? Like
I had one person who was trying to pretend they were going to write like the biggest check I'd ever heard of, which already that should be a signal for just anyone fundraising when it's the biggest check you've ever heard of and they're asking for some weird stuff. Like it's usually too good to be true because there is kind of like this gauge of size of largest check in VC funds, depending on the size of your fund. But like you got to see it through because I'm like, that's a really big check. We should take this pretty seriously. What does this look like? But I think what they ultimately wanted was for us to somehow manage our money with them. And I don't know. I was like, my wires aren't going out. Like the wires are coming in. So then we can go invest in the companies. This is confusing. It really was like a big time waste. So anyway, I digress. I'm sure that's like what everyone's going to get from this live. They're going to be like, oh my God, these con artists sound crazy.
What? I'm sorry, what? This is like so crazy. Speaking of the big checks, so another question would be like, okay, how do you get like an anchor LP? So like whenever I feel like chatting with a lot of like emerging managers, I think one of the things that people's like biggest hurdle is like getting an anchor LP. I think it's like living in Silicon Valley, there's a lot of people can write, let's say like a 50K check or something here and there. But I think getting the first like deep believer is kind of like a process. So I wonder, can you share a little bit more of like maybe your experience or like your thought process on like, convincing the first like true believer of your fund?
I look at it as similar to the issues my companies have sometimes where they're like, look, we have half the commitment, but we need a lead, and in early stage, it's sometimes hard to get someone to be that lead. Like we often don't mind being that lead, but if we're not, if we're writing a smaller check or what have you, I usually just advise them as startups, and I'm sure we have startups listening as well as investors, but I usually just say like, just throw it together and raise it on a safe or something and take all the money you have and run and then get a lead the next round. I think that's okay. You can still be this early stage round and get it done. I feel pretty similarly when you're raising your first funds, like it takes a minute sometimes to get an anchor. I mean, you can kind of cobble together. I think fund one, I like cobbled together quite a few small checks. And then it was like I had some. And then I got a larger check because they already felt like we were a little de-risked. So I just like, for me, I don't think there's a perfect system. Like, yeah, sure. It'd be great to go and like, have this anchor investor who comes in every single time for a sizable amount of your fund. And that does happen. But certainly in the early years, that's very difficult. And you do need to cobble together these checks to like have a sizable fund. So I think you just do it every which way. I don't think you just need to get there. Like if you're raising 50 million, you just need to get there.
I wonder, since like a lot of our listeners are emerging managers, maybe this is like their first time raising a fund. So a lot of people are softly talking to LPs or like just having, in general, having a lot of conversations. I guess, when do you solidify, like if a person's like interest is X amount of dollar? Because a lot of it would be, oh, okay, so you're interested, but how much are you interested in invest? Like, what would be the converting process from like an interested person to an investor?
I think you never want to take money from someone who doesn't have it. So for me, like if I start feeling like they're concerned about writing this size of check, I'm like, come back next fund if you're feeling a little like money brings out these really interesting stories in people. I mean, I've had multiple people this time around, like in our first meeting, like, hey, I'm going through a really complicated divorce. Like this is like the first time I meet people, and I'm going through a really complicated divorce. I really want to write a check. It's locked up for a while. Like, when are you closing? Right now, I could write this size check, but I could write this size check later. And, that happens a lot. I mean, money brings out just like this really sort of interesting conversations where money's tied to everything, it's tied to marriages, it's tied to, real estate, it's tied to everything in your lives. And so, I think it depends, but, you don't want to take money from people who feel finicky, because those will be your worst investors. Like I literally walk away. Like I've had investors occasionally who are just really nervous all the time. And I just want investors who are like excited about what we're doing, want to work closely with us, and understand that they're writing us a check and it's going to be a 10-year lockup. And then they'll, hopefully see a big multiple back. And they just want to like root for us along the way, because it'll make your life a lot harder if you have kind of a tough investor in the beginning. And that usually stems from they wrote you a bigger check than they felt comfortable. So I would think about it that way. But for me, it's a very simple answer, because we're only allowed to have 100 investors. And unfortunately, they have to be qualified purchasers. And so that means you have to have 5 million or up in assets. It's a really big problem in venture capital as a whole. I'd really like to change it. Like I've gone up and down and all around with my lawyers to figure out how we can take more checks. But if you have over a $10 million fund, you can only have 100 investors. And if you have under a $10 million fund, you can have 250 investors. which doesn't make any sense to me. And so now there's ways to like, I've talked to Kathy Wood about how to raise from the retail investor, because everyone should have access to privates as well as publics. And it doesn't make sense to me that like everyone on the street can't just write a small check and we could take as many as possible. And there's ways of collecting that. And I think maybe that's what you were getting at with the 506C. There's ways of collecting that, but you're not able to take a management fee on it. So how am I supposed to operate my company? So that's a real problem, because already in VC, you don't get enough necessarily to manage your business. And so I manage all this money, but then I only get like a tiny percent to hire and, hire my team, pay my team, and all the things that go into like running a business. So it's kind of this catch-22. Hopefully eventually we'll figure it out. But that if anyone wants to talk about that, I would love to talk about it.
Amazing. I think you're so knowledgeable, and thank you for being so like transparent, like sharing with us about like, your thought process around it. So in terms of like picking the future of family sector to invest in, how did you arrive at that decision? And like, what are some trends that, let's say, like, what would be like your top 3 trends in that sector that you're most excited about?
Well, right now we're so excited about this future of family thesis. So how do you support the family at work, at home, the physical health of the family, and the financial health of the family? So I think within that thesis, I am hyper focused on childcare as a big piece of it. Like we can't do anything in society without good childcare. And unfortunately, in the United States, we've completely failed families for under the age of 6, for kids under the age of 6. And some statistics that have kept me up at night. And I've found really unique technologies to actually solve a lot of these while making make an impact as well as a lot of capital is I look at, foster care. We have to solve foster care in order to solve childcare as a whole. Foster care is a totally solvable problem. And we found some interesting technologies to work in social services. And so they sell to the government as well as externally. And if we solve foster care, which is 600,000 children in the United States at any given time, it goes up and down regularly. We get 50% of the homeless off the street, which is a major issue in the United States, certainly on the East and West Coast right now, definitely in San Francisco and Los Angeles, and but that's a huge number. And then also 70 to 80% of the incarcerated today went through our foster care system. So something's not working. And it's this little triangle of homelessness, incarceration, and foster care that needs to be solved. Philanthropists are throwing their money at homelessness because that's what they can see. But what they need to learn about is they need to go and visit a prison. They need to understand how incarceration works, and they need to start adopting and taking care of these children that are our children in the United States that are in foster care, which means they're property of the government. So right now, I see that as a solvable problem that accesses more returns for our fund, because then we can start whittling away at childcare as a whole. But we have to solve those problems first. So we have a company called Binti that sells into social services that matches children with families, because it was done on paper until just a couple of years ago. They matched 118,000 children with families in the last year, which is like 60% faster than the United States government was doing it. We have a company called Upwards who just raised a great round. They're based in Los Angeles, and they're the technology overlay to 66,000 in-home vetted childcare locations. They offer corporate benefits programs, and they just did a big deal with the government to launch a subsidies program for children living below the poverty line whose families can't afford childcare. And that's honestly Upwards is the most affordable option we found for childcare in the United States. And then the last one I would tell you about just in that little thesis is Raza, which is amazing. They're based out of Utah, and 30% of the workforce today has something on their criminal record. So we're not putting murderers back on the streets or anything like that, but they have something like a small drug crime, a DUI, something stupid they did when they were young. And these people are 30% of the workforce. It's actually going up to 36% by 2030. And we need these people to work. We need these people in jobs. And so they are about to, so anyway, this company is a legal tech company that helps these people with things on their records get jobs by expunging their criminal record for an affordable amount. And so the Walmarts of the world wants to hire this workforce, and everyone needs to hire this workforce. We need 30% of our workforce. It's a lot of us. And they can't do it because people have to check this little box. So those are a couple companies, technology companies, that it's a very small piece of our overall thesis, but I am so excited because I'm seeing actual progress. And it is so cool to invest in companies that are making real solutions in something like that.
Totally. In terms of, I guess like when it comes to, you mentioned about like your, what you're overall looking at when it comes to like, there's 10,000 deals that you will be looking at every year. And then you guys will have some certain benchmarks to, like, which deal to moving forward to. I wonder, would you say like your, best companies are coming out of like outbound, like, or inbound? So would you go out there and then hunt like a certain couple entrepreneurs, or would it be more of like a layback approach? Like, we're just gonna filter out this like 10,000 deals in general.
Yeah, I mean, when you get 10,000 deals, there's a lot of crap in there. You see some crazy companies. I won't give you an example because I never want to like make people feel like their dream is a bad idea. But you get a lot of crap. So you do need to like figure out processes to filter through. So I highly recommend getting a great CRM product. That could be a Salesforce. We use Affinity, and that'll help you tag deals and like filter. And then also in Affinity, they have like auto tags. So it's like healthcare, and you can just type it in and all the healthcare deals kind of come out and you can kind of glance through them. But also it's a combination. You can't just expect the deals to come to you. Sometimes, because I'm also always crafting this portfolio. So I know what I want the portfolio to embody. And I really think about portfolio construction and like what brands we need in there, how can they work together, and what, company, like I like it when all my companies kind of work together in some way or have a similar customer. And so I want to make sure we hit a little bit of everything and that we create a really diversified portfolio. So not all that's going to come in necessarily. We may attract mostly like D2C fashion e-commerce brands, for example. And like, I'm not going to do as many of those in this portfolio, or so you need to kind of like get into different networks. So we also, so I'll also go out and I try to be in the mix. I'm at a million conferences. I mean, you're just constantly networking. We throw events, we gather founders, and we kind of look. I love going to pitch days for YC and Techstars and stuff, but I usually see the companies before and kind of take a look and see if there's anything there. So I keep my finger on the pulse at different accelerators. But I mean, the best time for me to meet with companies is like before they've done anything. I love it when I meet an entrepreneur who's like, I have this idea. I haven't totally fleshed it out. What do you think? And then they come back 6 months later and they've built it. It's the best. So you just need to kind of be out there talking to as many people. Ideas come from every which way.
I wonder when it comes to, let's say, like technical diligence, because I know that you guys invest in consumer tech. So there's like the technical component. Would you like have people on your people to vet the technical component, or like, I guess like, or would you say it's more towards like the business side of things? No matter what tech you're building, like you need to, I guess, like chat with the customer or something. I guess, how would you evaluate, or like when you mention about the CRM, like what would be your, like, let's say 3 or 2, 5 benchmark for you to evaluate a deal? And I have like a mini half question in this domain, which is, I know that like, when you invest early, later on, like you have to try to get a markup from like some tier 1 investors, or like basically the downstream funnel. How do you think about, who do I send this deal to later? Or like, is it like an afterthought, or would you say it's like a main benchmark that you're using, like to see if, okay, so we invest in this company, like, Sequoia is going to follow on to the next round or something. So how do you?
No, this is such a great question. It's interesting. you invest in a deal as an early stage investor, and we work with all the funds. We work with all the later stage funds, and some more than others, but I wouldn't look at it like you need a tier one investor to invest in. When people talk about tier one investors, they're typically meaning Sequoia, Andreessen, the five sort of Silicon Valley oriented venture capital funds that have been around forever. I actually think that those are no longer venture funds. And when they invest, that means it's PE. They're much later stage. They're now all registered RIAs. So it's like not who we're looking for right off the bat. And actually, the coolest thing is right now what's up for grabs is like the next tier one, like who's the next tier one, because these LPs are looking to create new emerging managers programs. And those guys are all kind of doing the same thing they've been doing forever, but now they are private wealth management firms. They have all become registered so they could do more secondaries and things. So we certainly work with them. But I wouldn't look at it like you have to have one of them. Like some of our most successful deals have not had one of them invested. And they, for early stage investors are not always the friendliest. And so you really need to be careful who you work with there. And they're not, because they're looking, they're not looking out for the earlier investors who discovered these deals. They're looking out for their own best interests, as most investors are. But at early stages, you have to be very, very careful. So it's a really exciting time for you and your whole community to get out there and become the next tier one investors, because I actually don't even consider them tier one investors anymore. But we work with Sequoia, Andreessen, Upfront, Greycroft, like all the great LA funds. We work with Alpha Edison, just did a deal with us. We love, all that, because we're based in LA, we love all these LA funds who are, I think, becoming the next tier one funds. And so I'd look at it like, if it's a healthcare deal, who are the best healthcare investors to bring in, and who can add value and construct, like for founders, they should construct thoughtfully their investor base. Like, okay, I'm a healthcare, consumer, like CPG company. So I want someone in healthcare. I want someone who has the ties into the healthcare system. I want someone who's, maybe they've done similar deals or had experience there. And you want to kind of have every piece of the pie. So I look at it that way versus like getting these like name brands. Like a name brand is not a helpful thing. You want a helpful investor. And I think tier one has been overused. Like we need new, that's not a thing anymore.
I wonder, so like when you mentioned, let's say we're going to send this deal to like the tier one, or not tier one, but like a good healthcare investor, how do you judge if someone's like performance would be good? Because I feel like it's easier to meet a lot of investors that are seemingly amazing, and then they invest in some like great deals, maybe like when you hear about their deals, the deals is probably like 5 years old or plus, or like to identify if they're like good because there's like follow on or something. So I wonder what would be the
it's like so easy. You call their founders, and you want one really great founder, like huge success story, and then one like founder that lost all the money, and you want to hear both sides, and you don't want to judge too strongly in either side, but you want to hear, like for the founder who lost all their money, you want to hear like how were they to deal with like at the end, and then you want to hear for the winning company, like how did this process go where you made them back their money? Were they helpful? How did they help you? I think you want both of those perspectives. That's a really great way. Like, and make sure you're diligencing your investors as a startup for sure.
Totally. When it comes to like, I guess like investing in the women's space, I'm sure there's a lot of people would be pitching you their like makeup product or their shoes product or something. I sometimes feel like it's really easy to get lost in like the zone of like there's so many amazing things to like look at, but I wonder, how do you kind of like discipline yourself on what not to invest in this like giant domain?
It's such a good question. I think it's really about reps, and having made over 100 investments now, it's you just learn a lot about what works and what doesn't work. And it's this pattern recognition thing that you can't really experience until you make some mistakes, and I think you should be really proud of the mistakes you made. because you learned so quickly because you're dealing with money. So I think early on when we started investing, we were looking at D2C fashion e-commerce brands pretty seriously because I was in media and I knew how to put a lot of these companies on the map. Then you have to kind of watch the market and the trends. And all of the sudden, like today, you see Google ads and Facebook ads are way too expensive for these brands. So all of a sudden, all our brands were just crashing and burning because they were spending 100 million to make 100 million. So no one was profitable. And this is like sinking the businesses because they don't have any cash to like operate with. And so that was just something I think no one foresaw in the market, that Google just doesn't have a ceiling. We actually had Google come speak to our portfolio because I was like, so what do we do here? Because you're just taking all their money. And I very quickly after Fund One was like, I don't want to invest in anything else that's a direct to consumer brand solely. And now you're seeing all these brands go back into retail because that's more predictable revenue. And it comes on a schedule and it's bigger revenue. And so you're seeing us kind of go back to the older ways, but it changes every day. I mean, you have to really pay attention to what's going on. So I've learned a lot about those. I'm a little wary of those. We do have a shoe company and we do love beauty companies. I like beauty more than fashion right now. And there's still big opportunities in all of it, but I think we need to figure out this Google ads thing. And then in terms of, those are just things I'm sort of like wary of. What I'm really excited about is new technologies that I've never even experienced before. Like when someone explains something to me and I just can't, I'm like, I get it, but like, is that even possible? Like, I love doing deals like that every once in a while. And those are the ones that like, you know, turn into the electric car or whatever it may be. But I like to kind of think we have this great autonomous drone company called Mighty Fly that's run by this incredible girl named Manal, who used to work at Zipline, which was is a very successful drone company. And she's just starting to take off right now. And she wanted to disrupt FedEx. And so that's what she's trying to do. And it is so cool. I was like, can you really disrupt FedEx? And I'm like, well, we can certainly try. And so I love companies like that are like found a problem, are trying to create the solution. And I'm like, okay, they're autonomous package droppers that are larger than anything and go to remote areas. And I don't know, it's very cool. But yeah, I think there's so many things that go into a good deal. Really, if you only want to take one, it's about the founder. Like, is this founder going to take you all the way? I ask a lot of questions about drive and laziness. Like I kind of try to gauge where they are on that. And like, do they have enough drive for 10 years? Because if they start being like, well, in 3 years, I think we'll sell at 100 million. I'm going to be like, well, my model doesn't really work that way. I need you to sell for $1 billion or go public. And I want to know that someone's in it for the long haul. And that doesn't mean I won't invest. Like maybe I just want to make sure there's a great COO who could take over, or I don't want all the pressure on the CEO, but it's really about the founder all the way.
What would you think? How would you think about reserves? Like, so like in terms of portfolio construction, would it be like, I guess, like what's your thinking framework on, since it's very early stage, how do you know which one to like, do the follow on run, or how do you kind of like think about reserve in general?
I look at it like they have 2 years to prove it to me. Otherwise they don't get any more money.
That's a great thinking framework. I wonder, when it comes to like, I feel like since you are, you have a really strong media brand and like you have built a media presentation, on the social media, what are something that you feel like the lenses that you are using to evaluate a company that like most people who are not coming from a media brand that would not kind of do?
Oh, like, how do I look? I mean, I guess the media piece only works for our real brands, but when you're looking at it, I mean, just when you're looking at a company, I bet on the founder. I bet on the product. Like, is it disruptive? Is it interesting? Is it proprietary? And then I look at the traction. Like, what kind of traction do you have? Do you have 100 users? Do you have 100,000 in revenue? Do you have $1 million in revenue? Or do you just have some really unique research that shows that this has never existed before, but here's why it should? And so those are the three things I kind of would look for, regardless of media background or any background. And the cool thing about VC is I think my whole team, we're generalists, but then we do focus on different sectors a little bit. But I think you are this sort of generalist. It's never good to be, I think, an expert or think you're an expert in anything. I can learn from you. You can learn from me. Everyone has a story. And I think that's how I look at VC.
I want to be mindful of the time. So I want to end with one real question and then 1 minute fire round quickly. One real question is since you have built an amazing network through your past media experience, you have chatted with Elon Musk and Sheryl Sandberg and all these amazing people, and you just mentioned Kathy Woods. She's a really amazing investor to be in the network. So I wonder, how do you kind of keeping in touch with people? Do you have a personal CRM for your personal board of advisors? How do you navigate the the soft skill set of things?
I think these are mostly business relationships. I think it's hard to think too much about your personal network. I'm closer to different people at different times. And then I always have my killer group of girlfriends who I think everybody needs. And I just went on an amazing trip with them. And we planned it for 1.5 years. And we did 10 days in Italy with some of my best friends. It was for all of our 40th birthdays. And it just re-establish how important it is that I make time for my killer group of girlfriends. Because I think, these business relationships, the way I think about them are, some of them are very good friends, but we need things. It's transactional. We need things from each other. We help each other, but we also, all have these different goals. And so I think people appreciate that, though. My kind of network, we know, I know this person can give me this and they know I can give them this. And so we'll call each other for those things specifically. But I think that, you should never be too calculated about your personal network.
Okay. So we're going to quickly end with a quick fire round for you. So what's your favorite book?
Oh my gosh. Right now, Invisible Child, which is all about, it was written by this economist that won the Pulitzer a couple of years ago. It's so important to read for everyone in society. It'll teach you about the foster care system through this family that's based in New York City when Bloomberg was cutting budgets. And it's fascinating and it's a page turner and you're just going to love it.
Who made the biggest impact in your career?
Besides my parents, my aunt, Polly, who was an actress.
Who would you invite to your dinner party?
Can they be dead?
It's your party.
There's so many people I just have so many questions about. I would love, it depends where we're going. If it's business oriented, I want to sit with Arianna Huffington and Howard Schultz and Warren Buffett. And how many people am I supposed to put there? And my dad, because he's the best. And then if it was anybody, I have so many questions about the mafia and how they were involved in, Marilyn Monroe's death. And then I would probably be Marilyn Monroe, JFK, what's his name? I just want to piece that together. I want the answers. I'm confused. I have studied Marilyn and her death for so many years. And I just am what happened?
Oh, wow. Where can we find you outside of work?
You're you just went dark.
It was dark. It was so random.
Where can you find me outside of work? I'm with my kids. I have 3 boys and they are active. I do a lot of I go to a lot of baseball games right now.
Amazing. Jessie, thank you so much for coming on the show. It's such a fun conversation.
Thanks for having me, and keep up the great work. Let me know how I can promote it. And I'm so sorry I have to hop. My whole portfolio is on a Zoom waiting for me.
Oh my God. Okay.
We're doing like a class with Reddit today. Okay. I'll talk to you soon. Awesome. Thanks.
Bye,
Bye.
Jesse.